As the market is once again near all-time highs, it's becoming harder and harder to find discounts in the stock market. However, LVMH, the luxury conglomerate that owns Louis Vuitton, is seeing their shares down 14% in the past year, far from hitting new highs. This is a massive, over $300 billion company that might be trading at a discount. So let's find out what's going on with LVMH, why their stock is down, and whether it might be a buy today. So let's start with a quick background on LVMH. Most people associate LVMH with Louis Vuitton, which makes sense. That's where they get most of their revenue from. Many people also probably associate LVMH with France, as this is a French headquartered company. However, their origins span all over Europe, not just France. So LVMH is not just 4 letters. It stands for Louis Vuitton, Moet, Hennessy, and those are 3 different businesses under the LVMH umbrella. And surprise, surprise, they're not all French. So Louis Vuitton is French. It is a French fashion house, most known for their leather goods, things like handbags. Moet is a delicious champagne brand, which actually has Dutch origins. That's why you pronounce the T in Moet. And I will preface this by saying that I am American and a lot of my pronunciations are going to be quite awful. So if I mispronounce something, please yell at me in the comments below. And Hennessy actually has Irish origins. Again, that's why you pronounce the H in Hennessy. So LVMH is not just French, it is French, Dutch, Irish, and more. When we look at some of their maisons or fashion houses, they own brands like Rimowa, which is a German suitcase brand. They own Loewe, which is a Spanish fashion house. And then they own brands like Loro Piana and Emilio Pucci, which are both Italian. And they also own Sephora, which is one of the 2 leading beauty and cosmetics retailers here in the US, the other being Ulta. So this is quite a portfolio of businesses. Let's quickly talk about how this came to be. So like I said, Louis Vuitton is where they get the majority of their revenue, and this is their largest fashion house. And it has quite a rich history. The namesake of the company arrived in Paris in 1837 at 16 years old. Louis became a valued craftsman with a specialty in trunks, cases, luggage. He worked under a mentor for 17 years before opening up his own business, and the rest is history. Now, I don't think Louis Vuitton needs much introduction. They have a very, very strong brand known for a lot of very distinct logos and patterns. I think one of their most iconic patterns is this damier print, which means checkerboard, but they also have a very familiar monogram. Now, fast forward to today, and this company is making a lot more than just trunks. They're making beautifully crafted handbags, jewelry, clothing, and other leather goods. I actually traveled to France just a few months ago, and when I was in Paris, I couldn't help but notice that there were Louis Vuitton stores everywhere. When I look on their website, there are 10 stores in Paris alone. And I think this says a lot about the strength of the brand. Now, when most people think of this brand, they probably think of the super rich. People who have enough money to afford these very, very high quality, very, very expensive fashion products. However, that's not necessarily the case. This company doesn't just market to the super, super rich. Sure, you're going to see celebrities, rappers, famous people wearing their clothing. However, a large portion of their customers are actually that middle class range. Let's think about it for a second. When we see this bag here, most of us watching this video probably understand what brand this bag is. It's a very, very common and popular brand. We also associate this brand with luxury, with high-end. When we see somebody carrying a bag like this, I think subconsciously we think to ourselves, wow, this person has it made, they have money, they are able to afford this bag. How much did this bag cost? $1,000? $2,000? So somebody having $1,000 or $2,000 means they've made it? No, absolutely not. A lot of the middle class will shell out way more money than they need to on products that they don't need in order to give the appearance of looking wealthy and looking rich. When in reality, true wealthy people, true rich people don't buy things like this. They don't buy things with lots of logos. Now, celebrities aside, when someone is truly wealthy, they don't want to scream, "I'm wealthy." They want to buy, and I'm generalizing here, clothing that is understated and high quality. So I think Louis Vuitton has this very, very interesting business model where they do sell these very high quality, unbranded luxury pieces and garments to the very, very super rich, but then they also sell these very loud, logoed pieces to the middle class who want to give off the impression that they are rich. When I was 21, and I cringe about this, I bought a Louis Vuitton belt. It was like $600. It was this one here, actually. It was the reversible monogram logo. So it had a brown monogram logo on one side and it was black leather on the other side, and you can reverse it. And I wore this to college. I wore this to work at my internship. I probably looked like such an idiot at the time. This guy in college wearing like JCPenney, that's a sort of discount department store for those of you who aren't in the US, wearing my JCPenney work clothes with my Louis Vuitton belt. I probably looked like such an idiot. And that's the appeal that this brand has, that people who really have not made it, I had not made it at 21, I still have not made it, but that I thought that I could buy this belt and that I would look professional and that I would look put together and that I had my life in order. And I really just probably looked like such an idiot. So I no longer own this belt. I sold it. But I just think that story speaks to the appeal of this brand, that even people who don't have money are going to seek out this brand. Now let's talk quickly about their other brands. Like I said, they also own Moet and Chandon, which are champagne brands. If you go onto the Eiffel Tower, you can go up to the top. You pay to either ride a little elevator or take a staircase to the top of the Eiffel Tower. You can look out over Paris. It's beautiful up there. It is very touristy, but it is very beautiful. And they will serve you Moet at the top of the Eiffel Tower. And the final brand that makes up the 4 letters in LVMH is Hennessy, which is a cognac. It is a very delicious cognac for those of you who are of drinking age. Very tasty drink. And as I said, it actually has its origins in Ireland. It was founded by an Irishman, Richard Hennessy, who actually served as an officer in the army of Louis XV. So quite an interesting collection of brands that has led to this luxury conglomerate of spirits, clothing, jewelry, cosmetics, retail stores, and more. Okay, so let's quickly now look at why the stock is down now that I have talked your ear off about the history of LVMH. The most recent news is that LVMH reported quite a soft quarter in Q3 2024. The key reason for this soft quarter was an uncertain economic and geopolitical environment in Asia. So when we look at LVMH's financials, we can see that Asia, excluding Japan, makes up 30% of their total sales. This is their largest division. So when China experiences a weak economy, this really takes a toll on luxury fashion companies like LVMH. They're also going to be subject to foreign exchange risks, so they deal in a lot of different currencies. We can see their revenue by invoicing currency is mostly 40% other currencies. So they deal with a lot of different currencies. After that is the US dollar and the euro at 28 and 20%. So when these currencies fluctuate, that can have an impact on LVMH's bottom line. Breaking down the segments here, we can see that their strongest growing segment was selective retailing. Sephora has been doing quite well in the US here, especially as they sell a lot of those cheaper, less expensive cosmetics, which are going to do very well in tough economic times. We see that their worst performing segment in terms of growth was a negative 9% growth in their wines and spirits, which makes up about 5% of their total revenue. Turns out people are able to skip that really nice glass of cognac when times are tough. Their core business, which makes up half of their revenue, is fashion and leather goods, which saw 1% organic growth year over year. So it's really nice that LVMH breaks out these different revenue groups so we can see what's working and what's not. Now, it's not just LVMH either who is seeing some headwinds. Smaller rival Kering, which owns brands such as Gucci and Saint Laurent, is also not doing so well. And same thing with luxury brands Hermes and Burberry, both seeing the same headwinds. This middle-class customer who actually makes up a lot of their revenue is finding it harder and harder to make these big purchases. So even though the super, super rich are not typically going to be affected by economic conditions, right? The middle class certainly are, and these middle class customers do do like their logos, they like looking rich, and that's what's been hitting the luxury sector a bit lately. This article here says, Chinese customers spooked by a slowing economy have reined in their spending. One glimmer of hope is that China announced some economic stimulus measures, which were aimed at restoring consumer confidence, but analysts believe that these have not actually had an impact on consumer spending. But this may be something to look forward to if you are an investor in LVMH or looking to become an investor in LVMH. So that's why the stock is down. The economy is weakening. This is, at the end of the day, a discretionary company. All of these purchases are not needs, but wants. As much as you might think you need champagne and designer handbags, you do not. So let's take a look at the stock and see whether this dip is an opportunity or not. This is my high quality company spreadsheet where I analyze companies on 11 different factors to take a look at their valuation and see what's going well and what's not at the company. Like I said, LVMH, a very, very large company. This is around a $300 billion company. Their gross margins, especially for a fashion company, are astounding at nearly 70%. So that means that, let's say you buy a lovely handbag for $3,000. It only cost LVMH $900 to make that handbag. So of the $3,000 you spent, $2,100 was markup. Now, that's insane. You would think that sales, discounts, promotions would eat into this. Well, there's another interesting thing about LVMH. Their brands do not go on discount. Louis Vuitton especially is notorious for never having sales, so if you want a piece, you're going to have to pay full price. Now, you could always buy secondhand, but the reason they can keep these prices so high is, now, I don't know if this has been confirmed, but it's been generally accepted that this company incinerates unsold merchandise in order to keep supply low and demand and prices high. It's an interesting tactic. So between not discounting their brand and not allowing excess inventory of their brand to be sold, they keep this prestige, which has led them to retain these very high gross margins of 69%. Of that 69%, 61% of that goes to selling, general, and administrative. This company does advertise a lot. They have very expensive celebrity partnerships. That all costs money. However, they don't spend anything on R&D because this is not a tech company. This is a fashion company. The company has debt to equity of about 61%, so I would say that that's a fair balance sheet. And when we look very briefly at their current assets, these are things that can be turned into cash within a year, and their current liabilities, things that come due and payable within a year, they do have more current assets than current liabilities, and they do have greater total assets than total liabilities. They only make 25% of their sales from the United States. They have a very geographically diversified stream of revenues. They do pay a small dividend, so their dividend yield is currently just over 2%, and they are seeing some flat year-over-year revenue growth currently, but prior to this, they saw about 8% year-over-year revenue growth in 2023. Now, valuation. On a price to sales basis, they trade at 3.5 times price to annualized sales. That might seem on the higher side for a company with no growth, but we have to keep in mind that this is price to sales, and of those sales, 70% is gross profit. So it makes sense why this price to sales number might be a little bit higher, even though the company is not growing. When we look at PE and price to free cash flow, which takes into account your bottom line and your cash flows, their PE ratio is just over 21, which is lower than the market average, and the price to free cash flow is just 15, which is quite low. It's definitely on the lower end of companies that I analyze. So for me, this is a company that is well established, is a bit of a conglomerate in the luxury industry, has a rich history, has very strong margins, very strong profitability, decent dividend yield. It doesn't appear overvalued by any metrics. The reason that their stock is down seems temporary. It seems related to economic conditions. So to me, LVMH does appear to be a decent value today. Now, of course, this is not advice to go and buy LVMH stock. This is simply my own thoughts on the company, but it does look appealing, and I'll definitely be adding it to my watch list and perhaps opening a position. By the way, if you want to see any of the trades that I make, I do offer a YouTube membership for $2 a month. You can join and see all of my trades. And it's a great way to support the channel if you like these kind of videos. Finally, if you are an American looking to buy shares of LVMH, keep in mind that this company is domiciled in France, so the primary exchange is the Paris exchange, where the ticker is MC. If you want to buy shares in the US, you have two options. You have LVMUY, which is an ADR or American Depository Receipt, and you have LVMHF, which is what's known as a foreign ordinary, so it's foreign shares that trade in the over-the-counter market. Now, these are both over-the-counter markets, right? LVMH doesn't trade on the NASDAQ or the New York Stock Exchange, so you do have to go over the counter. But if it were up to me, I would personally pick LVMUY. It does have a bit higher liquidity and a bit greater volume. Otherwise, you can't really go wrong. Both of these represent ownership in LVMH, the company. And if you do have access to foreign markets, you could open up a brokerage account at something like Interactive Brokers. You could deposit dollars, convert those dollars to euros, and purchase shares of MC stock on the Paris exchange with euros using a platform like Interactive Brokers. I'm not sponsored by Interactive Brokers. That's just the one that comes to mind that allows these foreign stock investments as a US investor. Thank you guys so much for watching the video today. Let me know your thoughts down below, and please subscribe if you're new, and please like the video if you liked it. Thanks so much and have an amazing day.